Well, good afternoon, traders. Really interesting point in this negotiation process now. You know, you can't call this a trade war at this point. You can definitely consider this a trade tension. If you want to use the war word, then you would be considering this a rhetorical war at this stage. A trade war would look far worse than this, and I think the fact that the VIX is trading at 19% and not 30% plus is testament to that. The fact that implied volatility, if you look at the Deutsche FX volatility index, is just above 6%, is suggesting that we are seeing a rhetorical war and not a tit-for-tat trade war at this stage. That may play out, and I think the fact that we're seeing this sort of markets in a bit of a hiatus looking for answers is testament to that in itself. Now, what have we got at the situation? What is the playbook we're looking at? Well, we know Louis Hure and the Chinese contingent are negotiating in America with Donald Trump's trade team, and we could get some further definition and colour coming through. The first thing, of course, we are looking at is this timeline, this deadline for whether this $200 billion tranche of goods, of Chinese exports to the US, will subsequently be raised 15 percentage points to 25%. Will there be an impact? Now, if you go back to the 24th of September, when we first saw this tranche of goods being taxed at 10%, there was obviously a sizable reaction in markets. Euro-dollar dropped about 5%. We saw the S&P mark the stage where we saw the distribution and subsequent sell down, big drawdown of about 20%. We won't see that reaction in my mind this time if this basket of good, this tranche of good goes up to 25%. You know, since we saw the G20 meeting in Buenos Aires, companies have had a long time to look at their supply chains. They've had a long time to alter that structure and de-risk where they need to be, because of course there has been an idea that there could be an increase to 25% at some stage. So of course it makes prudent planning for these corporates to change and alter their structure where they need it to be. The next stage will be, firstly, will there be a counteraction? Will there be a counter proposal from the Chinese? Well, we're not so sure if that's going to be the case, but of course we are watching dollar CNH in that mind. It's already through the 200-day moving average. Will this continue to see a sell down in the offshore renminbi? And of course that could have implications for Chinese, sort of quasi-Chinese proxies such as the Aussie dollar, such as copper, and also the Chinese equity markets. One suspects they will have downside in that situation playing through. The next point, of course, is what happens with this 325 billion tranche of goods, which Donald Trump in his Sunday tweet said could go up to 25% shortly, quote unquote. What does shortly actually constitute? I think in that situation, the market is subscribing a very low probability that actually happens. And I think if that was to go up, you'd see the full suite of assets and of goods being traded, tariffed at 25%. And I think that would therefore warrant a sizable countermeasure and a counter proposal from the Chinese. What does that look like? Do we see a big drawdown of their US treasuries? Well, you know, unlikely in my opinion, but that's certainly a lot of what the conspiracy theorists be looking at. You'd also be wondering, you know, how much lower the renminbi can go to absorb that additional taxation that we're going to be seeing. Some people have said that could be, you know, 5, maybe 10%. That'd be something that we definitely will be looking at. The weakness in renminbi, if we do see a devaluation there, that could have big implications for global FX volatility. Euro-dollar vols will probably ramp up. You're going to see the yen really coming into its own. You know, Swedish krona yen would be my continued favourite short. Aussie yen shorts would look very attractive in that situation. You're going to see broad volatility in bond, FX and equity market pick up. I'd imagine the VIX in that situation would probably trade nicely above 30%. We all know there's a massive short position in VIX futures based on the non-commercial numbers that we see every week. You know, part of that would unwind, and you'd see this sort of you know, this rapid false move higher. Now the S&P, we're already seeing the structure there looking quite bearish on the weekly chart, which I like to look at. It gives me a good structure and feel about the setup that we're seeing in there, a more holistic sort of standpoint of what the S&P is doing, and the Dow. And you can see last week we saw this kind of hanging man pattern, this candle playing through, and that suggests that there's, you know, the bears are establishing firmer control. The bulls tried to push price higher, and they failed, and you know that suggests that what we want to see is this week we wanted to see a gap down, which we saw. If the market can close somewhere below 28.60 and below, that would give us some idea that we're seeing an evening star, a reversal candle playing through, and that would give us real confirmation and belief that this market goes lower. If you have a look at the price to book ratio on the market, you know, if you look at where we were in November, well, we've got about 5% to get to those kind of levels. So one suspect at a minimum, if we were to see a negative scenario playing through where we see the full suite of assets being taxed at 25%, if we see counter proposals from the Chinese, then we've at a minimum got 5%, but I suspect we'd probably be looking at a much longer term downtrend, and then obviously that gets extenuated when the systematic guys come on board, the trend followers come on board, and that really pushes price down. But we are in a hiatus at the moment. You know, we're looking at these negotiations. Donald Trump has said he received a beautiful letter from President Xi. That's a nice thing to receive. Everyone likes a beautiful letter. But then he said there was an excellent alternative. We don't know what that excellent alternative is as well. So the questions we want to know is, what is the excellent alternative? When he talks about 325 billion shortly being put up, what does shortly constitute? There's a lot of questions. There's not many answers at this stage, and we're looking for that. The other situation, of course, is what we're looking for tonight in the US CPI numbers. The idea that Powell may actually be right and this soft period inflation may be transitory, may get confirmed tonight. The idea of a separation, a rhetorical war between the two biggest economies in the world, higher volatility, a potentially higher US dollar, higher real rates, and less accommodative interest rate policy is a toxic mix for me, and again would play into the idea that you're going to see a downside move in the S&P and the yen would again come into its own. So a lot of things to look out for at the moment. We're looking, one, will these tariffs on this 200 billion be put up? Secondly, if that doesn't materialise and the talks break down, will this full suite of assets be of goods be priced, and what will the countermeasures be? So a lot of questions to look out for there.